Many people are trying to tell us that the bull market is over, especially those Bitcoin halving enthusiasts. But why? Because it's always done the same thing before? You've probably been hearing more about the business cycle as well from some of those top YouTube channels. But maybe it sounds a bit too like this time it's different and we're going to get an extended or super cycle. And you've heard it all before, especially in 2021 when people were saying it, and it never materialized. But what's different this time? Depending on what side or camp you've chosen to be in, or maybe you have a case of indecision, or maybe you just want to remain completely neutral and avoid getting caught up in any particular theory. Well, in this show, we'll unpack this all a little bit more, and I'll be completely honest on how I'm approaching this, what my strategy is, and what my beliefs are. So if that sounds good to you, we have lots of charts and important information to go through today. So let's waste no more time and jump straight in after this quick clip of Raoul Pal.
Construct is the same. It's not a mystery. It is a repeat of the debt cycle. They are rolling the debts. They are doing the same thing. Each cycle is not to do with a halving cycle, nothing to do with any of that. It's all driven by liquidity cycle and funding of debts. Hold on to your hats. Don't fuck this up. Don't lose control of your tokens. Don't use leverage. Don't get your wallet hacked. Just sit with it. Be careful. Don't get FOMO. Do all of the right things, and we'll go up to the next phase of correction zone. That's going to be harder because the next one that happens, we'll have a 35% drop, and you'll all say, "Is it over?" And you'll definitely be sure it's over. And everybody on Twitter will tell you it's over, and it won't be over. By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well.
Now that was Raoul Pal talking at Sui Base Camp around 6 months ago. The correction he was talking about, saying we're in this now, was actually the correction before this one, okay? And he said the next correction could be 35% or more, and everyone will tell you it's over. You'll believe it's over, but it won't be, okay? And he also explained how we're potentially in an elongated cycle due to the Federal Reserve and the US government rolling the debt, and could potentially see this cycle go on into Q1, Q2, 2026. So this is well before everyone was talking about the cycle being over. Obviously the halving enthusiasts always had their eyes on the cycle ending in Q4. But what I'm trying to say is the business cycle enthusiasts have had their eyes on this cycle going on into Q1, Q2 of 2026 for a long time, okay? So there's two sides to this argument, and we're going to unpack that a bit more today. Just before we go further, I just want to give a quick disclaimer. I'm not a financial advisor, and none of my content should be taken as financial advice. These videos are just me sharing my views on the market, and you should always do your own research before making financial decisions. So today, let's go through some technicals first, and then we'll get into the cyclicals in a bit. So here's the S&P 500, just to show a quick macro overview of the stock market, and things are extremely healthy despite the recent retracement to the 21-week EMA. We could see new all-time highs as early as next week. Same for the Russell 2000, which is lower market cap stocks. If this breaks out and rallies, this symbolises a time for more risk on environment. That period of it all being about the Mag 7 could be turning. Looking at the Nasdaq, the top 100 tech companies, if this breaks out and rallies again, I believe this is where the bubble begins. As we know, it's AI-led, and in my opinion, it deserves a big bubble. Just like it did in the late 90s. How long does it last for? Who knows? But I see plenty of signs of why it continue and no signs of it stopping. We have the data to follow for now, so let's just take it year by year. People will call it a bubble long before it pops, just like people will call a recession long before it hits. And, looking at this now, when we zoom out, okay, like you've got these channels. Okay, this was in a channel for the early 90s, from the late 80s to early 90s, and then it broke out, and this is where you really got the bubble. And you know what we've had here, you know, since the 10s, okay, and now into the 20s, okay, and you know it could break out and you know move away from this standard deviation channel. Okay, you saw it tried to have a go in 2021 and then it fell back into the channel, but you know now it's been riding across the top of this channel for some time now. And you know these blue lines here are all US elections, okay, and as we can see there's mostly a good trend up from the elections. Okay, you can get a correction sort of midways, you know, but you know there is potential. You know, this could get a correction midway as well, but does it break out into more bubble territory, then get some corrections, but continue on right through Trump's presidency? We will have to see. Now, looking at Bitcoin, and Raoul said that we would get a 35% correction. Well, look where we are now. We've had a correction of around 35.5%, 36% roughly. And as he said, people would be screaming that it's over, and they have been. So while many people are calling it over just because it lost the 50-week moving averages, and you know it's cyclically the post-halving year and it's Q4, it's also looking like another retest of this huge cup and handle pattern, and it could potentially be holding this 100-week EMA. And if it doesn't, there are other lines in the sand below this trend line. Okay, you've got 74,500, which was the previous low. We've also got 69,000, which was the previous cycle's all-time high. Okay, so there's some lines in the sand. Yeah, okay. Whether we hit those levels or not, you know, there is a strong potential of a reversal here. Okay, because if we look at the 14-day RSI, okay, some of these levels it's hit would have been the same in previous cycle lows. Okay, here we go. This is 2021. Okay, this was March 2020. This was back in December 2018. Okay, go back further. You know, this was 2015. Okay, so this is a low. These are oversold readings on the RSI. It does not mean it can't go lower, but I would say that we've had what's potentially a mid-cycle top. A lot of higher readings were here. Yes, we went higher. A lot of other indicators show signs of a mid-cycle top as well. Like I say, it doesn't mean we can't go lower, but if I was feeling a bit overexposed, maybe I'd think about de-risking in those ultra risky positions and moving some of that capital back into high conviction plays, because I do believe that crypto will get to a euphoric stage. Okay, just everything lining up for it with what's going on in the business cycle and just fundamentally for crypto. So whether we go lower, whether this does go into a bear market or not, I do believe in crypto for the long-term future. So therefore, I am not selling, especially at these levels. Now, the total 2, excluding stablecoins and Bitcoin, is still in an uptrend, showing an overall health and potential for the crypto market as a whole. It is below all moving averages, and the 200-week could be tested again here. However, it's still in an uptrend with higher lows and higher highs. And based on other factors that we're going to be going through today, I could easily see this breaking out into new all-time highs as we head into 2026. Total 3, which excludes stablecoins, Bitcoin, and ETH, okay, in a similar position, although it's falling out of the pattern. Again, the 200-week EMA is riding below. But if I put it on the monthly, you can see that there's every potential that if we get a bullish December, that we could find ourselves way back up in the trend and in this pattern once more, and it will be seen as a fake out in future months to come. And for total value locked in DeFi, it seems to be holding well here around the 120 billion mark. If we zoom in here a little bit, it does look like it's potentially holding here, okay, and potentially confirming a higher low. And just the same as when we look at it here on TradingView, it looks like a very similar type of correction to the previous ones. Okay, so this is total value locked in all chains on DeFi in crypto. Okay, like we saw the 5 and 13 cross, and it come down, swoop below, come down to the 50, just below the 50 there, moved up. Here, 5 and 13 cross, come down below the 50 to the bottom of the cloud, and then went up. This time, 5 and 13 cross, come down below the cloud. Are we going to go up from here? It's all there to play for. Then we've got others, which is the rest of the crypto market, excluding the top 10s. It looks a lot worse. If you haven't been holding top coins as a big part of your portfolio, this is why you are hurting more than most. However, another way to look at this is this is the bottom for the 2-week RSI. Let me bring that so you can see that next to me. Okay, if this is the bottom and the 2-week RSI is hitting the lows here again, and we've seen price fall below the trend line, okay? But we also saw this in March 2020, okay? When price fell below this historic trend line, okay, this created generational wealth buying opportunities. If you believe in everything that's going on in crypto with its adoption, it may feel extremely uncomfortable to buy right now, but the people who did in March 2020, okay, they saw life-changing gains, but it's only there for the people who want to take on that risk head on, and that's not always comfortable for most. But like I say, this could be one of those opportunities. It might not. You do not know. But, you know, falling below here, low RSI reading, it does seem like that to me, especially with everything we can see going on in crypto. Now for total free versus BTC, still in a downtrend, yes, but it seems to be maintaining a higher low. You know, if we are at the stage where we can get a move up here from now, okay, we could soon see this breaking trend, okay, for the first time in a long time. We had a fake out there, yes we did. But if this is not a fake out on the next breakout, we could be on. And this is a similar situation for others BTC. Been holding the lows here, higher lows, okay, in this pattern, okay. And it's like I say, with all that went on, you know, around that mass liquidation event in crypto, okay, everything getting wrecked, others BTC potentially, I know it wicked lower, yes it did, but it looks like it's held a higher low. And this is a 2-week chart, okay, and you know, if we look at it on the monthly, okay, we could be starting to see some sort of reversal of a W pattern potentially if we can get a move up here, and this could be symbolizing a turning point for altcoins, which I believe have been in a bear market since January 2022. Okay, we might have had various altcoins pump and run, you know, and you know, might have seen certain narratives take off, but generally the whole crypto market has been in a bear market since then. Okay, and even with things like Ethereum, Solana, XRP, okay, all touching all-time highs, literally just breaking all-time highs, but then rejection and going down. You know, effectively, they've not had a bull market. Now, let's take a little listen to BitMine and Fundstrat's Tom Lee for his opinions on the 4-year cycle and what he believes is going to happen going forward.
Let's go back to the 4-year price cycle for Bitcoin, because it's still hard to escape this chart. 3 of 3 times since the history of Bitcoin, the 4-year cycle, or 3.91 years, exactly called the top and the lows. So the question is, why is Bitcoin subject to a 4-year cycle? We asked the Fundstrat Digital Assets team to give us the 5 most logical reasons for this. There's the halving cycle, there's monetary policy, margin debt. But the 2 things that I think have actually become more important in our view is gold versus copper, and then the ISM, or which is just your traditional economic business cycle. So let me explain. So the halving could explain Bitcoin because the halving is pre-computed, but the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics, World Cup, etc. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. And one of them is copper versus gold. And this is a tweet from AO BTC analyst. And we decided to recreate it, which is, let's look at the ratio of copper prices, which is measuring industrial activity, to monetary base, which is gold. And in the past, you can see it had a predictable 4-year cycle, except this time. And if you line it up with Bitcoin and copper, they actually line up almost perfectly. But copper and gold are not in a 4-year cycle now because that ratio should have peaked this year. Similarly is ISM. ISM is a measure of US economic activity, and historically that had a 4-year cycle. But as you can see, the ISM is not following a 4-year cycle today. It's actually stayed below 50 for almost 3.5 years. If you line up the ISM to Bitcoin, you can see it almost perfectly explained every Bitcoin cycle, including the original Bitcoin price peak. So it's even more explanatory than the 4-year cycle. But again, this time the ISM is not peaking. So here's the question I'd ask you. If the industrial cycle is no longer following a 4-year cycle, and copper gold isn't following a 4-year cycle, I'm going to say I don't know if Bitcoin should follow a 4-year cycle. So I'm not in the camp that Bitcoin price has peaked. And the only way we'll know is if we make new highs in January, which is our bet.
So just to break that down a little bit, okay, what Tom's really getting at here is there's other cyclical charts and indicators that show that this cycle is going to carry on longer, okay? And what if you're a Bitcoin halving enthusiast, you're like, right, well, you know, it's so many days since the halving, you know, every 4 years is a halving. That's why Bitcoin is on this timing, okay? But what he showed there is that Bitcoin wasn't only ever on the halving timing, okay? It's also on the timing of other cyclicals, okay? The business cycle was always in time, shown by the ISM, okay, that it was always in time with Bitcoin. And this time, different, because the US government have extended the debt cycle, okay, meaning it's going to push out further. Raoul Pal says 5.4-year cycle now. I don't know about that. I would also say that if Bitcoin does top in Q1, Q2 of 2026, who in years to come would say that wasn't a 4-year cycle? What, because it was 4.25 years or 4.5? You know, some cycles will be 4.5, some will be 4, some will be 3.5. You don't know. It all depends on economic activity and monetary policy. Now, just to have a look at this, I've created this chart, okay? So we've got copper and gold here at the top. We've got the ISM here, and we've got the 14-day RSI, okay? So as we can see with the 14-day RSI, if you look at that first, okay, you can see that it's reaching a bottom now, okay? Now, every time it sort of had a bottom here or, you know, extremely oversold levels, okay, we saw a reversal in copper versus gold, okay? When copper went up against gold, okay, that's usually when we see an increase in the ISM, okay? As we can see, the ISM bottoms when copper gold bottoms. So if we've got the RSI telling us, you know, that we are, you know, potentially bottoming here, you know, then maybe the ISM has bottomed as well, and we'll start to see the break above 50. When we saw the break above 50, okay, we saw the rally in copper and gold. This is another confluence, okay, that this is the longest time that the ISM has ever spent below 50, okay? So that's another sign of confidence. Quite a downtrend for copper versus gold. Gold has had a fantastic rally, okay? As we've seen, silver now been rallying harder recently. And then you know, there's a risk flow in commodities and precious metals as well. Okay, now if gold's had its run and silver's had its run, you know, think of copper as the altcoins of the precious metal scene. Okay, so maybe it's due its turn to run as well. Like I say, all three of these charts lining up. So you've got the copper and gold, the ISM, and the RSI on the 14-day. Looks like it could all be indicating a low is in, and we're going to see some upside soon. Doesn't mean it's going to happen. This is on the monthly as well. Doesn't mean it's going to happen this month, next month, who knows? But it's coming, and that's when these things are all at their lows, okay? And when they go up, it indicates risk on. Why would I sell my bags now when this could be a point where it's better to actually accumulate more risk, ready for the upside? Now, you can wait for your confirmations, you can wait for these things to start turning. You know, I never advise catching a falling knife, okay? But when you start to see these things turn, I believe it's going to be really positive for risk markets. Also, another couple of things I'd like to show you of how the ISM impacts risk in crypto, okay? So let's take a Bitcoin dominance, okay, and overlay that, and you can see the opposite swings. Now, if I was to say get Bitcoin dominance and invert that, okay, we can see, you know, the swings. They're not exactly the same, but cyclically are very similar. Okay, you know, 2017, you know, upswing. Okay, upswing in the ISM. Okay, you know, downswing into the 2020. Okay, and then upswing 2021. Okay, downswing throughout 22, 23, and 24 and 25. Bitcoin dominance is showing a sign of potential reversal. The ISM, the longest time it's ever been down there, will it reverse? And these two things, they won't move in tandem, but they will move cyclically around in the same year or so. Okay, so we've potentially got some bullish action for next year, in my eyes. Now, if I take that off, okay, and I can overlay ETH BTC, yeah, there we go. Okay, very similar type of thing we see. Okay, ETH BTC, I believe, is just a mirror of Bitcoin dominance anyway. Obviously, Bitcoin dominance accounts for all the other coins, but ETH leads. ETH is the most dominant apart from Bitcoin. Okay, but like I say, very similar thing there. And what do we see for ETH BTC? Okay, if we you know, just look at that right now. Okay, potential reversal, big spike up, you know, and it's holding despite all of what happened recently with all the liquidations. ETH BTC is potentially could have create a big higher low here if we can move up. Now, this is my Bitcoin dominance chart, okay? And I like to look at this when you're talking about cyclicals, okay? The 4-year cycle, I used to be a 4-year cycle enthusiast until I really discovered more about the business cycle and economics and everything. I used to think it was just magic how, you know, Bitcoin would always do this 4-year pattern around the halving and everything like that. But looking at Bitcoin dominance, okay, because, you know, we're all altcoin holders, okay, well, many of us are anyway. I know you might have a few maxis watching, okay, but so the halving cycle, so it's given like some precise number of days and weeks, you know, from halving to, you know, top, or halving to low, or low to low, whatever way they want to measure it, okay, but Bitcoin dominance is doing something different, and we haven't got a lot of history here. This is why the business cycle and the ISM is more important, really, because it dates back further. It's got more history. You know, so far Bitcoin dominance. Okay, in the first time it dropped down, which was the 2017 cycle. Okay, from the US elections in 2016 to the drop low. Okay, was 427 days. From the halving to the drop lows, okay, was 548 days. Okay, the next cycle was a shorter period. Okay, it went quicker. Okay, it went 296 days to the drop low from the elections. Okay, it went 372 days from the halving to the lows. Okay, now this cycle we're in now, okay, it's currently 396 days, so it's less than the 2017 cycle. It's more than the 2021 cycle. Okay, it's 396 days since the US election. Okay, so quite normal timing. Okay, now for the days since the halving. Okay, and this is where the halving cycle enthusiasts saying it's over. Okay, because in the first cycle it was 548 days from the cycle halving to the drop lows of Bitcoin dominance. And in the next cycle in 2021, it was 372 days from the drop. Okay. And now it's 596 days from the halving. So it's longer than both of those cycles from the halving, but it's less on the election from the first cycle and more from the second. So these days, they're going to vary, okay? You can't try and call things precisely. But one thing I've always said in all my videos, and you can go back and check me on this, okay? I've always said this cycle will not end with Bitcoin dominance at the highs, okay? It's just a part of emotions in cycles and risk taking, you know, that you get a euphoric stage, you get a risk flow, okay, into riskier assets. And then that's when you get like the mass retail come in because the gains are really good. People talk about the gains, and then they want a piece of that, and then they become, and you know, unfortunately, they become exit liquidity, and you know, and the mistakes that they make become their tuition fees. They learn about the markets and they stick around maybe for next time. If they get burnt badly, maybe they go and never come back. Okay, but you know, it doesn't matter because there's so many people in this world and so many new generations coming through that there's always someone new to take on that risk. And that's not just people either, that's companies, that's institutions. There's always something new to take, or someone new to take those risks. And I believe that risk taking is going to come, and all it will take is Bitcoin to take a strong recovery, maybe following the stock market up, and then I think that we will start to see a bit more risk taking, and then this dominance should be dropping down. And just to show another bit of correlation to the ISM, okay, so as we can see here, okay, we've got the ISM down here at the bottom. This is the Nasdaq, okay. Now these are blue lines are presidential elections, okay, and as we can see, okay, you always get a ISM peak between elections. Okay, the only one there was a bit low, but it just had the peak before the elections. Okay, and then you know every other one, you know, we've seen it, and we haven't had a peak just before the elections. The last peak of the ISM we had was just after the 2020 elections in 2021. This has been down for a long time, and I believe we're going to get a peak in between now and the next elections. Okay, so it doesn't mean it can't go up sooner, chop about, everything like that. Maybe we get a sooner peak and then it falls down. There's no way to tell, but I'm highly confident that we get an ISM peak between now and the next elections. And just to answer the fact of why, you know, some people might say, but you know, the stock market's been doing really well and everything like that. Well, if you look at all these other times, so let's just go back and zoom in on a few. Okay, let's bring down like recent years. Okay, right. So, okay, so before this peak, okay, right, this was with the ISM below 50. Okay, you already had the indexes running. Okay, running up to the top of the channel. Okay, then we had the previous cycle before that, before the ISM went over 50, the markets had already started to run, okay? And here, you know, you can see all the times, okay, the ISM was, even before it went above 50, you know, there'd always been these rallies out of the lows. You know, before the ISM, even better to look at the 90s, okay? You know, before the ISM peak, before it went above 50, you know, it's had strong rallies. Okay, so indexes, and from now, what I'm seeing with Bitcoin, they will lead these big cap assets, ones that people have a lot of faith and a lot of trust in, will run before the ISM. Okay, but it's not till the ISM breaks above 50 that you see risk on with riskier assets. And as I showed earlier, the Russell 2000 looks ready to lift off, okay? And as we can see with the ISM, with the Russell 2000, you know, when this goes off, it sets off the big rally. You know, when it goes above 50, it sets off the big rally. You see? Yeah, and this is history, okay? And this is going back to, you know, to the early 2000s, you know, and like I say, you could look at this with the S&P 500, and you've got way more history than just a Bitcoin halving cycle. So there you go. This is why I'm more leaning towards the business cycle, the ISM, and we can see that we're getting rate cuts as well. As we were talking about earlier with, you know, the copper and gold, and you know that being very cyclical. Okay, well, this is gold versus BTC. Okay, now when you look, okay, I've highlighted on here these patterns. Okay, so where you get a low, you get a push up, and then you get what looks like a higher low, then it rolls over. Okay, low looks like a higher low, you know, trying to push up, rolls over. Okay, similar. So that was like 2012, 2016, 2020. Okay, you see these lows with a push up in the middle, rolls over. Okay, gold is always going to roll over against Bitcoin. It's never going to outperform for a long extended period of time. You get these periods where it will, but the gains on Bitcoin, it's just going to outperform gold all the time, I think. And what we're seeing here, okay, yes, the declines are getting smaller. Okay, some might say, you know, oh, could that be a reversal in gold versus Bitcoin? But I believe it will roll over again. Okay, and what we can see, I've got the ISM down here as well. Okay, so let's look. So let's look at 2012 first. Okay, when it rolled over, that was when you started to get the ISM going above 50. Okay, in 2016, when gold rolled over against Bitcoin, we got the surge up in the ISM. Okay, in 2020, okay, it rolled over, and you can see, look, it made a low, made a high, tried to get up again, rolled over. Okay, and then that was when the ISM started moving up. Okay, and now what we've seen in recent times, a bigger pattern. Okay, all with double bottoms. Okay, double bottoms, rise up, double bottom, you know, then roll over, ISM to go soon. This is all things that gives me confidence that we will see the ISM go up and we will see the risk flow. And a couple of charts here from the Real Vision team. Okay, this is the GMI interest rate model. Okay, 6-month lead. Okay, now if the interest rates, now I believe this is inverse. Okay, so if the interest rates are going to come down, okay, then the ISM will go up. Okay, then we've got the 2-year bond yield. Okay, inverted. Okay, so you know we want to see the bond yield come down. Okay, and then we're going to see ISM go up. Okay, and these green dots are a market implied Fed rate cuts forward curve. So meaning that, you know, as they cut rates, the yield will come down and then the ISM will go up. And another one here, this is US banking lending standards. Okay, so all to do with, you know, how much lending they'll give and everything like that. Obviously, they will lend more in times where, you know, the markets will do well. Okay, so you know, if the lending standards are about to probably increase like that, okay, then the ISM, because it follows a cyclical pattern. This is what I'm trying to say with these charts. There's a cyclical pattern. Yeah, they mirror them. Okay, and this is why they can be leading indicators to the ISM. So now, not only have we got cyclical reasons why the ISM is going to go up, okay, it's been down for as long as it can be, okay, and you know it's been for as long as it's been, sorry, and you know then you know there's a potential that this is going to lead on, okay, and you know the Fed rate cuts, okay, you know December 10th, with a 93% chance of a 25 basis point rate cut. Okay, So December the 10th is this week. So we should be seeing a rate cut. I believe the markets are stalling around the rate cut decision. I reckon as soon as the, although, it's pretty confident and it's, some might say it's priced in and, all of that, but maybe it's priced in the stock market, but it's not priced in the crypto yet. And crypto had its own issue. Okay. It had that deleveraging event. That was not stock market issue. That's why stock markets are up near all-time highs. Okay. And crypto is still down. Okay. But crypto can move very, very fast. And next year, we're going to have a new Fed chair who will be favorable to Trump. And here's Trump actually mentioning something about that now.
Being here, it's a great group. And I guess a potential Fed chair is here too. I don't know. Are we allowed to say that? Potential. He's a respected person, that I can tell you. Thank you, Kevin.
Yes, he mentioned Kevin Hassett there. Okay. Kevin Hassett now with an 81% chance of being the next Fed chair. None of these others even close, okay, on Polymarket, okay. And Scott Bessent, we know he's not interested anyway, okay. He's happy doing what he's doing, okay. So Kevin Hassett, pro crypto, probably very favourable for cutting more rates and giving us some nice juicy QE. So we know they want to cut rates. We know they want a weaker dollar so they can refinance the debt. Okay, and along with that, with a drop in the DXY at a similar time to a rise in the ISM, we saw that in 2021, we saw that in 2017, 2018, okay, and we've seen it in the past as well, around 2011, okay, and there was a big drop here down into the 2000s as well, matching up with a top in the ISM. Okay, so it is all possible that this is all going to happen and looks very cyclical, in my opinion. And another thing I want to indicate with the HGX, the housing sector in the US, okay, with this double top in 2005 and 2006, 2007, 2008 saw the crash, okay, down into 2009. Okay, when we overlay the Nasdaq, okay, we can see that after the housing market rolled over, okay, the stock market continued into 2007, almost 2 years after that first top, okay. Now we look at where we are now, okay, with a top in 2024 and a second top in 2025, okay. We overlay the Nasdaq, okay, and we can already see the divergence starting to take place. We've got the housing market starting to break down, and we've got the Nasdaq still on a tear. Okay, now if you was to say 2 more years again, that was October 2024 was that first top. 2 years later would be October 2026. There's nothing to say it lasts for 2 years. I'm just saying that it's been known that the stock market continues longer than the housing market. So there's also that to think of when you think about the 18.6 year real estate cycle. If you don't know much about it, I recommend you check it out. There's a really good book called The Secrets of Real Estate and Banking by Philip Anderson. I recommend you read it. It will give you a lot of history of 18.6 year cycles going back for the last 100 years, and you can see what I'm talking about. So coming up this week, we've got the JOLTS job openings, we've got the Fed funds rate, and the FOMC decision on Wednesday. Okay, it's going to be a really important week. It's going to be interesting, probably a lot of volatility, but it's all good. And just a bit of positive hopium to end the show. Okay, that we are just ending a Mercury retrograde. We've just finished it. It finished on the 29th of November, I think. And you can quite often see a significant move after the retrograde. So, it can go sideways quite often and chop around and quite often dump into Mercury retrogrades. Yeah. Okay. We can see a lot of dumpy action into them, but you see way more volatility in between them. Okay. So if you're in a bear market, the chances are, it's going to drop down further in between those retrogrades. Okay. Yeah. But if you're in a bull market, you'll see some of these big rips in between the retrogrades. Okay, all of them have been in between. Okay, and that goes back, you know, in the whole of Bitcoin's history. But what you see is turning points as well. So if you get a retrograde, okay, quite often the direction can be opposite to the one before. Okay, so say in between the last retrogrades, okay, we saw a downturn. Okay, then maybe we see an upturn this time. It's like, you know, back in December 2024, we saw the downturn. It was followed by an upturn, followed by a downturn. You know, and this has happened before. I can go back to, you know, earlier on in previous cycles. Okay, let's show you. Okay, so here, okay, so we saw a downturn into March 2020. Okay, and then an upturn. Okay, we saw a slight downturn in before it, and then we saw the upturn. This one, obviously, you saw the big leg up. Yeah, saw a correction just before it, and then as we got to the end of the next one, started to see the rollover and the downturn. Okay, then we saw the upturn. Okay, and then we saw the downturn. Yeah, okay, so probabilities are that you see high volatility in between Mercury retrogrades, low volatility during. It feels like you see more of a volatility because you're seeing downside or you're seeing upside. But really, the real moves are taking place in between. Okay, and then the other positive thing is that you actually see some actual movement. Okay, after the retrogrades taken place. As you might not know much about Mercury retrogrades, but all I'm saying is technology breaks down. We've seen flights grounded at airports during Mercury retrogrades. In the most recent one, we saw Cloudflare going down, AWS going down. Okay, we've seen phone companies go down during Mercury retrogrades. Problems with AI and Google, I think, in a couple of times ago. So, you know, put your tin foil hat on and just take a moment to have a look. This indicator is available on TradingView. It's called Mercury retrograde periods. You might enjoy taking a look at that one. So I hope you've enjoyed today's show. Okay, I hope you feel a little bit more reassured of where we are in the bigger cycle. Okay, don't be counting days from the halving, in my opinion. Okay, that stuff, you know, it worked while it worked. You know, if the US go back to refinancing the debt on a 4-year cycle, we could quite potentially go back to a 4-year cycle. You know, and like I say, if we go back lower from here, go down lower from here, and then we go up again into 2026, you know, that's what's going to happen. It's all there. It's all open to play for. But I believe that all the things I've shown you there about the ISM being very cyclical, it's not just a chart. It's not just an indicator. It's based on true fundamentals and economics, okay, that have gone back for decades. And I believe that in cycles, things do repeat, and but just maybe not days from the halving this time round. Okay, so if you've enjoyed today's video, don't forget to click like and subscribe, and I'll see you on the next one. Bye.